I hope you've all had a Merry Christmas and a Happy New Year. I took a little well-needed break myself, although I never really checked out from the graphs. And those of you who follow me on Twitter or AUGERE, link in the description below, have partaken in my thought process so far with regards to Bitcoin. Amidst the early December ascending channel breakout, I did share some detailed thoughts on why that happened on Twitter. And to neatly sum that up, the cluster support at around this area was much too obvious, as in to the point where even the most greenhorn novice couldn't have missed out on it. And what happened here was that one too many traders had laddered in longs in this very zone. And once the price spiked below it, as in normal, it immediately triggered some leverage stop losses, which further added selling pressure to the downside. And now, ladies and gentlemen, we may in fact be in for something very similar, and that's the main premise of this episode and what we'll dissect in full. But before that, please note that nothing in this episode constitutes financial advice. I am not a financial advisor, and if you appreciate what I'm about to share in this episode, then please return the favor by slamming the like and subscribe buttons. At first glance, Bitcoin and the alt space look absolutely dreadful. It's death and destruction pretty much across the board, but things are always at their darkest before they turn around. And we could in fact be in for a bullish reversals, and that for three key reasons. Let's get down to business. Since its early November all-time high, Bitcoin has lost about 40% of its value and is now trading at its key support zone. This level is strong and has acted as a reliable bouncing level many times before, but this is also pretty much the final frontier before the next significant support level at 30,000. The only minor exception lies around here at $38,000. But that is like duct tape compared to welding. It might be strong enough to sustain a nasty spike, but I don't count on it being able to hold more weight than that. But more on that in a bit. Thus, if this zone doesn't hold up, then we're in for some massive trouble, to put it mildly. Now, Bitcoin may have burned one beautiful chance after the other at making a mouth-licking lower bullish red closing on the daily and the 2-day chart. But it's not all doom and gloom yet, there's still hope. And the first reason spells this big wobbly head and shoulders pattern right here. Personally, I don't care much for this pattern at all. It is not a legit head and shoulders per se, as we decide to start counting mid-trend at our discretion. But that's not the point though. For now, we're in a leveling game with the rest of the market. And if the rest of the market looks at this pathetic attempt at a formation and labels it a head and shoulders for further downside, then we'll adapt to that erroneous belief, as it will in turn affect the outcome. Now, in this sense, its presumed neckline coincides roughly with the support zone between $40,700 and $43,000, give or take. But here's the thing, just like this recent and overly obvious support cluster failed for precisely those reasons, as in being too obvious, this head and shoulder that everyone and their damned uncle seem to be tweeting and obsessing about is hence likely to suffer the same destiny of disappointing vast amounts of people, and especially so those who think they're outsmarting the markets by front-running the formation. Those are the very people who've sold off amidst this recent dump, and today they feel like Einstein and Newton and Marilyn was savant combined. But don't be surprised if or when the market gets the final laugh. Now, historically speaking, regular head and shoulders patterns have a really bad track record in Bitcoin, as in to the point where they should rather be considered a counter indicator. And we don't even need to go that far back in time to see the latest confirmed case. For the last major example we saw last year from early January till mid-summer. And already back then, people were drooling themselves to sleep at all the money they'd cash in on shorting Bitcoin. And what happened then? Well, Bitcoin took off by 130% in the upcoming 5 months. For this, ladies and gentlemen, is what typically happens in Bitcoin amidst the head and shoulders. Everyone sees it, everyone positions themselves for a short, and Bitcoin rallies to the upside. Now, I'm not saying that this will happen once again. All I'm saying is that I'd be very careful about playing a head and shoulders pattern in Bitcoin myself. Real careful. The only working exceptions to head and shoulders seem to be the reversed ones, which in fact perform really well. And part of the reason for this is that they're harder for novices to detect, and as there are fewer participants to exploit them, they're less likely to backfire. Bitcoin's current fear and greed index stands at a record low of 15. What this tells us is that there is extreme fear times 2 in the crypto space. But what it also tells us is that a lot of people have sold off their holdings in anticipation of further downside. And what happens then when there are few to no sellers left? That means that any little buying pressure will pump the price to the upside. And once those genius front-running sellers see the price going up again, they desperately buy back in out of pure FOMO. And hence they add significant buy pressure to the table. Here's a little quiz for you. When did you last think this happened in Bitcoin? You got it. Right here. Now, before moving on to our final point, let me be perfectly clear. If this scenario were to unfold the way I suspect it might, as in very bullishly, I would still not be surprised if we were to see a fake out to the downside, as in that $38,000 area that we touched on earlier, before shooting back up again like a spring feather. Such move would trick a bunch of gullible retail traders into shorting, upon which they'd be quickly disappointed upon its sudden yet blatant reversal. And of course, this would cause all those sad shorts to get stopped out, upon which we'll see a wonderful buying pressure erupt. And finally, our last logical argument lies in good old Marathon. Marathon Digital Holdings is trading right within a beautiful ascending channel, technically confirmed beyond recognition. And as of producing this episode, the price has found wonderful support at the channel's floor. This, in combination with the aforementioned points, tells us that this offers an attractive risk to reward spot. And if we swap to the 2-day chart, we can see that the stock is currently trading at the EMA 200 as support. And if we look historically, this moving average has offered good reliability, and I have just based on this gotten myself a good nice marathon position. And this I've done based on the compiled message throughout this episode, as in the head and shoulders pattern in Bitcoin, the brutally low fear and greed index reading, and the fact that everyone is expecting lower Bitcoin prices, and the fact that Marathon is trading at support within its ascending channel and is testing its EMA 200 as support. Again, I don't know where Bitcoin or anything else is heading, but from a probabilistic point of view, I really like what I see. If I position myself for a long and I'm wrong, the downside should be limited. If I'm right, however, we could be in for a serious pump.